In this video, I'm going to show you how you can use Forecaster for trading and investing. I get a lot of questions on what strategy can I use in order to really capitalize on opportunities in the markets using Forecaster. So whether you're an investor or whether you're a trader or whether you're both, I'm going to share with you exactly how you can do that right now with live setups right now, opportunities right now, not in the past, right now, that you can go and take a look at. So let's get stuck in. So first of all, I'm going to go over to Forecaster, all right? And the first thing I'm going to click on is the screener, the quantum screener. And what this is going to do is it's going to give us a list of the best correlated opportunities in terms of seasonality and what price is doing right now. And it's going to give us all of the data. It's going to analyze all of the data, all the qualitative and quantitative analysis in the background, and give us a list of what's the best opportunities on the radar right now. Okay, now that alone isn't enough to go and place an investment. Maybe you do, but for me that wouldn't be enough. So what I like to do, what you can do, is first of all I'm going to go out to the monthly time frame, okay, because I'm looking for trades in this example. And then what I'm going to do is I'm going to go to Forex, because Forex is my area of expertise, and I'm going to look at the best, like the top. So this is row best to worst. Now the Euro Try isn't in my portfolio, so I'm going to ignore that one. I'm going to go to the next one down. You can see this is 96.13 best correlation. It's a long opportunity. The win rate 72%, which is great. So we're going to take a look at this. So what I'm going to do is open that out into the seasonality tab. And I'm just going to extend this to, say, the end of August, somewhere around there, right? Or sorry, beginning of August. And I'm also going to bring on some of the seasonality, like the 10, the 15. And you can see, you can really drill down. Already the correlation looks amazing, right? The correlation looks great. This is the Swiss yen. If you just go to here, you can play around with the different times, the time periods, the time horizons to suit when you want to looking to get in and get out of this setup, right? So you can see already that is from today, basically, or tomorrow, until the 22nd of July, okay, at the time of this recording. And that's got over a 90% correlation with price over the last 10 years, 15 years, and 25 years. But we've also got 80% seasonality score, 73%, 72%. That's a pretty decent, that's a decent little shot. 4%, 3.5%. So about a 3.5% average return over the lot. That's great, right? So the question is now, we've quickly identified the best opportunity in terms of seasonality and correlation in price, in how price is moving right now, and does that match the seasonality? So now it's how can we get involved? So this is where we go over to the actual chart of the pair, right? And you're looking at the chart and you're thinking, okay, how can I get involved, right? Now, this is where you're going to have some kind of setup, some kind of technical setup that allows you to enter objectively the same every time, okay? But you can use that entry, or you can use that forecaster analysis to then pinpoint which chart you should be looking at for the setups, so that you're only taking your setups on markets that have proven to have that seasonality and correlate and are correlating right now, okay? And then it wipes out all of those other setups, so you don't have to go and spend all the time looking through all your charts, identifying setups that just may not perform as well, okay? So you're actually building discretion. You're getting some opportunity to optimize your system using Forecaster. It's doing some of the work for you. So one of the things we can look at here, if we just drill down to, say, the hourly time frame, right? And you can see we're on the hourly time frame. Some of you might be familiar with ratio patterns. So you might have heard of the Gartley pattern, you might have heard of the bat pattern and the crab and the shark and all these ratio patterns. And what they are is a sequence of Fibonacci ratios, okay? And when that sequence plays out in order, there's a high probability that that final decompletion will produce a move in a certain direction, whether that's bullish or bearish. Now, in this situation, we're going long, okay? So we're looking at long opportunities. Remember, we go back to here and it says long. Okay, we're looking, and by the way, you can set long or short opportunities only, right? If we set long, You can see it's still there. We've got the long opportunity there, right? So with that being said, the rules of engagement into a bat pattern, and a bat pattern looks like this, by the way. I'll just draw this out really quick for you using the Fibonacci ratio pattern tool. Okay, it looks something like this. So what this means is we look for that impulse leg, which we've got here. Okay, we look for an impulse leg, which we've got here. Okay, and then we want a retracement, and the retracement, the rules of the bat pattern is it has to hit a 50% retracement from X to A. Okay, so you bring on your Fibonacci retracement and you bring it from high to low, and it has to hit the 50% retracement, which this does. Okay, the second rule is the C leg has to hit the 382 retracement from A to B, which it does. And then the final rule of this pattern is the completion point is at the 886 retracement from X to A. Okay, so in other words, the 886 completion point will be down here, and that completes the bat pattern. X, A, B, C, D. As you can see, the 886 is somewhere down here, right? And that was the completion point for the pattern. Now, instead of just trading this bat pattern conventionally, where you're looking at targets at the 382, you're now instead going to go, right, well, this is a much longer term move. I'm going to take half my position off at the 382, and then I'm going to trail my stops right up until the 22nd of July or the 27th of July, or whenever that date was that you decided to come out, right? And you're squeezing more profit out of this trade that you may have only just got a smaller profit before. Make sense? So I recommend learning a number of entry techniques, right? Setups, so that you've got them in your toolbox ready to apply when you're using analysis like this. It's amazing. It's amazing. Let's take a look at an investment opportunity right now. Okay, so instead, I'm going to go to the 6 month, and I'm going to go to the S&P 500. Okay, now straight at the top, we've got Autodesk. Autodesk is a product that I know well. I understand how it works. I used it for many years as an engineer. I used to use AutoCAD. And the great thing about Autodesk is there are not many competitors. In fact, every time a competitor has come up in that space, Autodesk just acquires it, wipes it out, absorbs it, takes the market share, and they've done a fantastic job at doing that. Now, I can see that we're showing a 93% or 94% correlation score, long position, 100% win rate, right, over the last 5 year. And then, great. It looks great, 16.7%. This is a really nice looking opportunity. So let's delve into that a little bit more and go into, first of all, the seasonality. Look at that, right? So if we hold this to the end of the year or mid-November time, that looks pretty decent, right? If we bring on some seasonality here as well, let's bring on the 10 and the 15. They're all matching up, right? So we've got the matching. The correlation score starts to go down, but look at this: 800%, 80%, 73% on the seasonality with a 24% return. Okay, 24% return. 100% of that is 100% of the time 24% return. Okay, that is a great starting point. Then you can look at the fundamentals. Okay, so you can see the profit going up, right? The net income going up. You can see the value of the stock, the fair value of the stock. We're 46.6% below the fair value of that stock. Okay, you can also see the solidity, right? So low risk of bankruptcy. They're considered to be strong on the Petrovsky score. You've got very unlikely to be manipulating earnings. You can see that the shareholders' yield was increasing, right? Shares outstanding is decreasing. So shareholders are buying back their shares in the business, because that's a great indication that, they know more than anyone of where the business is going, right? And they can see the value internally. So great. This looks great. Yeah, so this is what I wouldn't say for this one is I wouldn't, you can go out to ADSK on a chart, right? So you can go back to, you can put ADSK, you can look at Autodesk, You can bring this in, right? And you could go and take a look at this, right? But what I recommend is, as an investor like this, you want to be taking your trading hat off. Okay, so you don't necessarily want to be looking at charts when it comes to investing in stock market, especially if it's like a longer term period. But so I would remove I would personally remove your temptation to look at charts, but just using forecaster, that's a great example of how you can really get confidence in a great opportunity. And the only thing that I would add on to this is you could start looking at overbought, oversold. You can start looking at qualitative questions like, do I understand the product? Do I like the product? Do I get it? Does it need repeat business? So Autodesk is a subscription model now, primarily. You can even go to the fundamentals and take a look at how that's built. So engineering and architecture and construction, right? The majority of their market share is in that, and that's not going anywhere. Okay, manufacturing, that's not going anywhere. So you can see, and because they're a software-based business, you know, the new AI innovations and things like that they're only going to make this business a lot stronger. I'm really looking at blue chip stocks who are using AI internally and on their products, not just on their products. Like people were saying, oh, Meta, they're developing great goggles and things like that, right? It's not just about the products, it's how they're using it internally. That's what's going to skyrocket the share value, because they become more efficient, better at using their cash flow. They're more lean. Microsoft, 30% of the coding at Microsoft is now AI, and by 2035 they believe that 72% of the output of coding will be through AI in Microsoft. So those types of statistics, those types of things are where we're going to see massive opportunities in the stock market right now. So I would highly recommend that you get to learn this stuff, right? Go and take a look around Forecaster. This is an amazing tool. I wish I had it years ago. I'll stick a link in the description and I'll pin a comment so you can go and grab it. Because if you're serious about investing, this is really the only thing you need. And if you're trading as well, and you're able to build a series of setups and have them in your toolbox, and then you can use Forecaster to identify the best ones, then go into the chart and look for those setups by definitive objective rules of engagement, you can just make a killing. So go and do that. Go and check it out. Let me know how you got on, and I'll see you in the next one.